Welcome to this session. My name is Andres Calderon. I'm the head of risk management at Acción International. With me is Adriana Madrid. She's our data scientist manager for Acción as well. And we want to talk to you today about our actual experience in using new tools provided by artificial intelligence and machine learning combined with traditional market tools in order to provide better financial services, deliver responsible financial services to the clients of one partner we work with in Latin America. We are all aware that in recent years, artificial intelligence has become a game changer in the financial industry, especially in the microfinance world. These models that are now available through AI and ML had helped us to bring much more data into the analysis. Things that before required a lot of time or that we needed to simply limit to minimum data points, now we have the capacity to go farther beyond that. That had, and I think that is the most known case that has allowed us to improve the accuracy of the credit assessment, but beyond that, in the credit process, has also allowed us to monitor and improve the way in which we assess the behavior and the performance of our clients, not only disbursing the loans, but also ensuring that we are in time when our clients start showing any signs of trouble. But the world of intermediation, of financial intermediation, is not only about providing loans and minimizing credit losses. One of the biggest opportunities we had also identified increasing productivity and improving the ways we relate and we relation ourselves with our clients. So in summary, we have that artificial intelligence has enabled us to address three main aspects in the relationship with our clients. First, improving customer experience. Definitely, we find ways to get better to them. For that, we are all aware of the existence of chatbots, virtual assistants. We are aware of more personalized recommendations about products, about interest rates, about conditions that are more beneficial for the client needs, and also personalize the loan offers. Another aspect that this artificial intelligence has been playing an important role is in increasing the operational efficiency. How to get faster and better and with better client quality to our clients. For this, we have tools in segmentation, in targeting, but also we can do pre-approval campaigns. We can get to the clients with the product offer they need when they need it. And that, I think, and we are not really going to talk too much about risk, but we had been able to improve the modeling and how to get to our clients much better and much efficient. In this presentation today, we're going to bring for your analysis two use cases that demonstrate how we can synergize artificial intelligence through machine learning algorithms with market research tools. And we are going to be focusing really in enhancing customer experience, how how we can address much better offers, what the client needs and what the client expects from the financial institution. And on the other side, how we improve the operational efficiency. Really, when we think about the cost of credit for the client, we know that one, it's the interest rate, and that comes mainly from delinquency trends. It comes mainly from how we are able to manage the client to get the payments back, but also there is an important component in what is the cost of delivering the products. Operational cost in microfinance is high, and that's why interest rates are high. So if we are able to reduce operational costs, we are also making great impact especially in the segments, vulnerable segments, or in the segments where Acción wants to make a difference. So we are going to be talking about these segments, these vulnerable segments. Here, it's very important to be aware that we have a lot of limitations. I'm going to talk a bit of the challenges before, just to be like an introduction to how difficult this had been. This had been the result of a journey. Acción really had been in this space for 60 years. Acción had been pioneering tools in order to get faster and with much more quality to these segments, but it had not been an easy path. The last 20 years, we had been pioneering tools like scoring modeling. We had been pioneering tools as business intelligence. We have been pioneering tools into trying to digitally transform the institutions that serve this market. But we have learned a lot from the segment. One issue we have identified definitely is that it's very difficult to trace and to have the entire picture of how the business of the client performs. Second, these businesses of these small micro-entrepreneurs, micro-merchants, and the households are merged. We can't isolate, we can't only analyze the business because most of the business and the family are together. Their dynamics, their financials are so tied up that it's impossible to isolate them. And it's very difficult to get information from the households. We also have issues with validating data. We have, as it's mentioned in the slide, cash still the main transaction mean. We don't have still, even though there had been a lot of advance into digital payments, still the majority of transactions at these segments happen in cash. So it's very difficult to validate what is going on. And of course, one of the biggest challenges is the capacity. Most of the institutions serving the micro and small enterprises are small institutions. Big banks, they prefer to serve easier segments. So the institutions that we work with are limited in the capacity, technological capacity to serve the client. So it's difficult to validate information, and definitely cash transactions are very difficult to monitor. But that doesn't mean that there is no data. All the data, whatever data is available, it's the best asset. And being able to combine the data tailored for the institution. In Acción, we don't believe in generic models. The combination between the product you are offering and the type of clients you are addressing these products is what makes the effectiveness increase of the tools. So data becomes a very valuable asset, and you need to do the best with what you have. So in this order of ideas, we had been increasing the way in which we use data. We started from having no data, only data that came from a interaction, face-to-face interaction with a client through a loan officer with an interview, then validating this data manually, also face-to-face with a supplier and invoices, moving farther a bit into institutional sources, now bureaus starting providing data, and finally we are starting to have information from some digital channels. This path comes from what is traditional into what some people consider non-traditional. It's becoming traditional now, and I will explain later why. Because now we have reached, and we have some cases in which we are now using geolocalization data. We are using inventory photos, photo analysis. We have seen to validate not only that the person is who he's telling us who he is, but we are using, for example, photos of the inventories to assess the size of the business and to make some financial decisions. We have much more tools that can help us bring some digital footprint of our clients. But this is where we are today. There are still some experimental sources of information that have some mixed results, for example, Google search usage, for example, the social network interaction, for example, behavioral data, including psychometrics, for example, and this is something that it's now starting to be like a day-to-day, day-to-day conversation in data analytics regarding open banking, how getting access to multiple thousands of data points, possible extra data points will help make the decision. So there is a huge challenge here, but the data is coming. And how is AI playing? Because now it's much easier to start combining this and to try to model this. So I just mentioned not credit. We are not going to talk about underwriting. We are not going to talk about quality of credit. We are going to talk how to get better to our clients using AI and combining it with traditional methods. So now, Adriana, please go ahead and give us an example of these cases of how we use this in real life.
Well, as Andres mentioned, we bring two case of uses. The first one is the customer knowledge and segmentation. It's very important to know what are the groups that we have, which one are the small entrepreneurs, which one are the biggers, and what is the characteristic of my portfolio. Not on the risk part, not just thinking about for targeting and having more tailored strategies and products for them. So in this case of the study, we use segmentation. So the first step is the business understanding. And we try to understand what was the business objective, selecting the right segmentation criteria, and also determination the segmentation population. So this is the first step. It's very important to know which one we are going to segment, which one are the active or the inactive, and choosing why we want the segmentation, what use we are going to bring to the segmentation. Then we have to do the second step is data understanding. What is the data source on investigation? What do we have available? If we have demographic data, business characteristic and financial balance, product ownership and money transaction, channel use. Then we have to define the data that we are going to use. If we have available the last 12 months, the last 20 months. And the third step is data preparation and enrichment. That is a future selection. So in this part, we do data integration and aggregation from the different sources of information. Also, we run data validation and cleaning. As Andres said, is an important step. Data transformation and enrichment below new variables, and also the data reduction through PCA and factor analysis. It's hard to deploy segmentation with a lot of variables, so we try to reduce to the less one that we can have the same amount of information and rich information. Then we run the cluster algorithms. We identify the segment with clustering modeling. We can use different kind of techniques. And we identify the segment with cluster modeling using in K-means or another algorithms. But it's important for us to evaluate and profiling the revealed segment. So we do that through a survey research to know if the pattern that we find on the data is matching with the client voice. Then the last step is deploying the segmentation solution design and delivery, define it a strategy for each segment. We bring, in this case, is a use case for a LATAM partner where we do segmentation and customer profile, and the business question was how we can segment the MSA. So the objective was they want to enhance SME customer engagement and loyalty, and they want to answer three questions: who they are, what product they use, and how they use the channels that they have available. So when answering these three questions, they want to do customer offering, tailored solution based on digital maturity and product needs. So the first step, as I say, is the quantitative analysis. So we build 225 variables based on the business intelligence knowledge and experience. Also, we pre-select some variables. So through business insight, which variables are more interpretability, reduction of possible spurious relationship between variables. We use a statistical technique when a category is too high or have too many blank. Also, we look for the variable that have greater explanatory power variables. And then we run a PCA, is a component principal analysis. So with that, we refine the selection. We exclude correlate variables, and we use S per use for choosing the last variables. So at the end, we run the cluster algorithms, and we identify pattern and natural grouping. We found, in this case of the study, 5 strategic segments. So we have 2 axes. The first one is what financial methods do they have? Other financial methods, microloan, and other, and how they use the channel and what is the digital maturity level do they have. So we found that traditional SME are using financial method microloan, and they use the traditional channel. So they go to the loan officer, and they go to the brands. They don't use digital channels. So in here, we want to string the digital capacity for this segment. The other segment what we found is low loyalty, is the people that have financial methods microloan, and the digital maturity is medium. So here we want to reinforce loyalty, bring every attention model. And then we have the only channel, the people that use microloan and other financial methods, and they are more digital. In this one, we want to try pre-approved campaign and also an MVP of technological development. And we have in this institution 2 big segments. That is people with low digital adoption that use traditional channels or don't use any channel, and also they have another financial method. And the last one is the people that have other financial methods and are more digital. And we want to understand why these people don't use microloan, what are the financial methods that they use. So the next step is understand who they are, what are the needs and preference. So we run a quantitative analysis through a traditional survey research. We gave face-to-face, we gave a face to each segment, identify the needs and preference. So we run a customer cluster recruitment and person-to-person interview and online interview in the major cities. So here we understand the whys and who they are. So for example, low digital adoption and traditional and Generation X, and the other segment were millennials. Traditionals are more rural, and the more digital are mostly urban. The level of formalization is in traditional poor. Digital with other financial method is above average. The low digital adoption is average. And the only channel and low loyalty is good formalization level and above the average. And how they use other financial methods. For example, low digital adoption and traditional, they don't use other financial methods, are below average or poor. Meanwhile, digital with other financial method, omnichannel and low loyalty have above average and average use on other financial method, low loyalty, poor other financial method. Through microloan use, for example, traditional use micro loans and low loyalty too. And they say, for example, they have a variety of options because they are good payment persons. So they have too many options. So that's why they are low loyalty. And we only could understand that through the quantitative analysis. And the use of digital channel, low digital adoption and traditional don't use digital channel. Digital with other financial methods. And on the channel, there are high users that have do wire transfer and payment. Meanwhile, low loyalty just use wire transfer because it's not the main bank. So after we found this 5 segments, we use the only channels and the digital with another financial method for try a propensity model. So we want to use AI for provide an scalable way to determine the propensity of SME to renew a microloan. It's a tool for support human decision making rather than as a sole determinant of loan renewal outcome. No, so the objective of the propensity model is generating pre-approved campaigns efficiency. So we want to increase the conversion rate, offer channel segmentation, reduce churn, because if we don't give the right offer at the right time, maybe he could go to another institution, and also resources optimization. So the time of the law officer is limited as human beings. So we want to give them, after the propensity model, we are more propense or likelihood to disburse a renewal. So before the propensity model is the same effort to all prospects. And after the propensity model, we target prospects pre-approved campaign according to the likelihood of renewal. Implementing a propensity machine learning model for micro renewal can lead us to a significant cost saving and increasing operational efficiency for financial institutions. So how is the process of building a propensity model? First, we have to think about the input data. So it's really important to determine information essential for lead scoring. In this case of use, we use demographic data, age, gender, education level, city, business characteristics like main activity, formality, estimated income, how ownership, household consumption, also what product they have, the microloan, what is the amount, the term, the interest rate, disbursement date. So in credit card, we find out what is the limit, the seniority, and the saving account seniority status. And then we look all the channels that he has available. In this case of use, he has app, web, and brand. So we look the login, wire transfer, payment, and with all the information, we calculate recency, seniority, active mode, number of transactions as frequency, and the campaign data. So, for example, email engagement information, also the frequency, how many campaigns have you been before, and variation from the offer. So what is the amount that we are giving you, and what was the amount that we gave on the last product, for example. So after that, we do a feature selection of variables. We run the propensity model, and in this case, we use logistic regression, the gradient boosting, random forest. We use neural network, and the outcome is the probability that an SME renew a microloan. So we got a probability and we rank the client for the loan officer. So in this case, we can say this one has more probability. Maybe you can go and visit this person first and not all the same effort to all your portfolio. Also, we think about data-driven campaigns. So we segment the channels. So these persons are more digital based on the cluster. So the offer should be digital offers, then call center office, and these ones are more traditional. You have to send the loan officer. This kind of model needs monitoring, calibration, and strategy because it's continually learning about the new campaign and how it's changing the portfolio for each interaction.
Thank you, Adriana. And I think this is being now currently implemented in the partner we work with. We expect to have increase not only in the number of clients that accept the bank offers for new products, for cross-selling, for renewal of their current loans, but also important impact in reduction of the cost of reaching out to these clients, because we are targeting the campaigns much better and we are optimizing the use of digital channels for the clients that really need these digital channels. But I wanted to close this presentation with other challenges that are now, we are adding to the list of challenges we mentioned at the beginning. One, it's that AI requires data. So building the model required a lot of work in putting together the databases, in constructing that data infrastructure. But to roll it out, we need to ensure that the data keeps being updated and keeps being available for the model. So it's important to have that buy-in from the institution and that agreement that the data will continue to be available and the new data will be also uploaded with the same quality so that the model keeps working and running. And also, additional to this updating challenge, also deployment. And in deployment, we identify one. It's about people, people and culture, a bit of getting the buy-in from the users in order to give the priority to believe that to believe on the tool, to follow the guidelines from the tool. I think we have struggled with that in our history from earlier scoring models to now artificial intelligence. We feel it's very important to ensure that we have an adequate people and culture management in place. Also, we are now very, very sensitive to responsible AI, customer privacy rules, using the data without biases, ensuring that we are not taking advantage of the power of artificial intelligence to create environment that might not be meeting best standards is something that we really prioritize in Acción. And finally, another challenge is about ensuring that there is the internal capacity at the institution to really understand, read the results, be able to monitor, handle this process. So these are the new challenges, and here I think we finish our presentation. We would be very glad to respond questions or to attend your inquiries. These are our mails. You can also find them on this page. So thank you very much for your attention, and thank you very much, Adriana, for participating in this session.